I'm going to talk about mastering the art of trading options and tips for small accounts. Growing a small trading account with options can be a challenging task, but it's definitely achievable. When I began my journey in trading options, my goal was to double my account every 3 months. However, I quickly learned that taking excessive risks without proper risk management would only lead to starting over again and again. And the only way to start over was by adding new funds to my account. I experimented with various strategies that mainly involved long options, which would eventually depreciate and eat away at my capital. Starting to trade options with a small account can be a daunting task. I remember spending long hours at work thinking about how I was going to make a living trading, but I only had less than $5,000. Achieving my goal felt impossible, but I didn't have any other viable alternatives. I didn't want to work until I was 80, which was the current path that I was on, living paycheck to paycheck with credit card debt. I didn't want to lower my expenses and live the minimalistic lifestyle, as my wife and I wanted to start a family. Starting a business was another option, but I enjoyed my job, which paid well and offered a flexible schedule. And besides, it was a family business, and I might run it one day, but that was too far into the future. So I decided to keep learning about options trading. I remember spending countless nights sitting at my desk, studying options until I fell asleep. I refused to settle for the mundane 9-to-5 job and retire at 65 with a regular income. I knew that if I could master options trading, I could create not just money, but time. My ultimate goal was to be able to do what I want when I want it. Through my experiences, I learned that until I could get my account to a higher level, like $30,000, it's acceptable to take on higher risk. And I could be long options as long as I had a way to finance them and hedge them against potential losses. I aimed to maintain a good win rate and ensure that my winning trades were larger than my losing trades. In my search for an effective strategy, I scoured the internet and experimented with various ideas. One day, I stumbled upon earnings-type strategies and was intrigued by the predictable upcoming events where options prices would depreciate differently than usual. This inspired me to delve deeper into the dynamics of options pricing during earnings and consider the possibility of buying options before the event and selling them before the price depreciation occurred. After conducting thorough backtests and analyzing the data, I found a consistent way to exploit this edge and implement it in my real account. Now, there are many strategies and techniques that traders can use to improve their chances of success, and one of them is to focus on maintaining a higher than 50% win rate while maintaining larger winners versus losers. The key to success with this approach is to ensure that your winning trades are larger than your losing trades. This means that when you do experience a loss, they're kept to a minimum, and when you win, you maximize your profits. Another important factor to consider is the ability to take advantage of surprise moves in the market. Many trading systems fail when unexpected events or sudden market moves occur because they're not designed to handle such situations. However, with a system that has an asymmetric reward structure, you can capitalize on these opportunities and potentially generate significant profits. One way to implement this type of system is by using options trading strategies that allow you to benefit from sudden market moves while limiting your downside risk. For example, you could use a long straddle or a long strangle strategy, which involves buying both a call and a put option. One thing I do is I go long a strangle for a discount in order to move the probabilities up. When an unexpected event occurs and the market experiences a sharp move in one direction, one of the options will likely expire worthless, but the other will generate a significant profit. This allows you to benefit from the surprise move while limiting your potential losses. Now, here are some things I look for when trading a small account. Number one, risk management. Managing risk is essential when trading a small account. Avoid taking large positions that can wipe out your account in case of losses. Number two, liquidity. Always look for highly liquid options to avoid being trapped in positions with no exit strategy. Number 3, option strategies. Opt for option strategies that offer a limited downside risk and an asymmetric reward profile. Number 4, win rate. Aim for high win rates, ideally over 50%, to ensure consistent profits over time. Number 5, position sizing. Properly size your positions based on your account size to minimize risk and maximize returns. Number 6, timing. Consider the timing of events such as earnings releases, as they can provide opportunities for profitable trades. Number 7, market conditions. Keep an eye out on market conditions and in some cases avoid trading during periods of high volatility. Number 8, patience. Be patient and wait for high probability trade opportunities to come along. Avoid forcing trades just to make something happen. It's important to note that the method I use to grow my small account is not the only approach that can yield success. However, since January 2022, I have implemented a proven strategy that has yielded positive results. Therefore, I recommend using similar principles to those that I have deployed. The following numbers from my real account serve as evidence that these principles can work. And I've shared my P&L every month since January of 2022 on my YouTube channel, and I've successfully turned $5,000 into $9,200 by utilizing this earnings-based strategy with a good win rate of over 50%, along with asymmetric returns. This strategy, like many other small account strategies, comes with higher than normal risk, as my account has drawn down from peak to trough over 46% since inception in January of 2022. Growing a small account with options requires discipline, proper planning, and risk management. It's essential to focus on strategies that offer limited downside risk, an asymmetric profile, a high win rate, and properly sizing your positions. And don't forget to be patient. And by following these guidelines, traders can achieve their goals and grow their small account with options. If you're a trader looking for trading consistency, if you keep changing your approach, looking to add one more rule that will get you over the top, I'm going to help you for free. Stay with me for the next minute or so. Now, who am I to make this claim? My name is Karl Domm, Karl with a K, and it took me over 20 years to finally succeed to become a profitable options trader. And I have publicly proven to be a profitable trader since I started sharing my P&L on my YouTube channel in May of 2019. Now, my larger options trading account started with $110,000 and now is worth over $165,000. And I'm the only YouTube instructor that shares my daily P&L, proving that I am a profitable options trader. Now, I've asked many other instructors to share their P&L, but they don't because they can't, because they actually lose money trading. And I'm frustrated with the lies being told. If you've ever taken an online trading course, I'm 99% sure that you're frustrated and that you've lost money following these instructors. And you already know that they don't share their P&L. Now, as far as trading myself, I just happen to have a passion for options trading. And I spent over 27 years learning and trading. And I'm not necessarily interested in the technical aspects of options from a scholastic point of view. I've been passionate about the most efficient way options can make me money. And this is my calling in life, as corny as that sounds. And I've even written a book on the subject, even though I hate writing. For some reason, trading ideas just flow into my head all the time. And I take those ideas and I spend hours and hours backtesting them. And after backtesting over 300 ideas, one of the trades I developed was a trade that I call the 2060. This is a proprietary trade I developed almost from scratch. I initially created the course to sell it, and I wanted to compete with these other YouTubers that were frustrating me with their fake claims. But what I've decided is I want to do what it takes to expose those YouTube fake gurus. And if I can offer something for free that is vastly superior to their paid products, maybe I could put a dent in their business, which in effect would be using my talents to help people. Because of this, I'm currently providing the 2060 course at no cost. And this is a full course. It's not a worthless free report or some piece of useless, non-actionable information. This is a full course with black and white rules that you can use to take action and learn how profitable options traders trade. This course is worth $495, but I'm giving it away today for free. See the link in the description to sign up for the course.